Hello and welcome to Fat Profits webinar, Commodities Breakout. Thanks for your company today. My name is Roger Malik, the Head of Client Services and your host for today's webinar. And joining me today is our Senior Account Manager, Chris Balafas. Chris, welcome to today's webinar. How are you?
Good, Roger. Nice to be here today with you, and nice to see so many already logging in. So looking forward to the webinar today.
Yeah, good to have you on board. It's been a while since we've done a webinar. There's been a lot of changes in the market. And look, one of the big changes, and while people are settling in, I can see a lot of people still logging in, so we'll give it a few more seconds. But I guess one of the key topics we're discussing today is commodities breaking out to the top side. And that's been a big change in the markets in the last few weeks. And, there's going to be several commodities we're going to discuss today. We're going to give away quite a few stocks as well. So hopefully you guys tuning in now have got your pens and papers handy. There'll be some breakout moves that we'll be highlighting. So you might walk away with some ideas today for sure. But while we got people coming in, can we get a bit of a feel from the audience? We've got 300, or about 280 people so far. Can we get some participation from people just to get a feel of where you're logging in from, just to see where our audience is coming from? If you can just type in your comment box, your location where you're logging in from. We'd like to see what part of the country you're from, or you could be overseas. That'll be a good starting point. And we will keep moving in the meantime. So before we get started, our presentation today is general in nature. We don't provide any personal advice. So if you're looking for that, please see your financial advisor. And past performance is not an indicator of future performance. And finally, if you have any questions, you can ask by typing them in on your screen. And we've got a Q&A session towards the end of the webinar. So hopefully during the webinar, most of your questions get answered. But if they haven't, you can ask towards the end. And that's where you can also type in your location. That'll be great. In fact, we're starting to see that now.
Yeah.
What have you got, Chris? Where are people logging in from?
Yeah, got a few from WA, a few New Zealand members. We've got some obviously from New South Wales, same time zone. Yeah, so this is really good actually. Good to see a different variety.
Oh, I've got a couple from Launceston as well, from Tassie down under. Oh, that's good to know. Hello to you guys. We've got someone just said Bathurst. That's countryside as well. That's great. So got some variety. One from Blue Mountains. Yeah, thanks guys. Looks like all around the country. There's a couple from New Zealand as well, so that's great. Good to have you on board. All right, well, while we've got others logging in, we'll get started now. So I think we'll just get into the topic. So Fat Profits, most of you know who we are, what we do, but we'll more on that a bit later. But we certainly like to go a little bit against the crowd sometimes. So first up, before we look at some sectors and stocks, we'll quickly look at the Australian stock market, ASX, and the top 200, and have a look at where we are positioned at the moment. Now, as you can see on the charts, pretty much over the last 12 months or so, the market has really not gone anywhere. We've gone sideways, a little bit up, a little bit down, and currently we're trending again in similar sort of direction. So if you're an index trader or you're a swing trader, you probably are not seeing a great deal of movement. But if you're a stock picker and you pick some decent stocks, you probably have found some value in the market. But all in all, we see the markets going, a little bit more sideways over the next 6 months. And while we still think there are some concerning issues around the economy, including interest rate cycle still not finished yet, inflation still being pretty high, and consumers starting to tighten their purses, we still think there is room to have a bit of cash in a portfolio, and we're not encouraging anyone to be fully invested. We do think there'll be some volatility ahead, and for that, having some cash available for buying opportunities is our suggestion to investors. And as fat profits, we're certainly holding a reasonable amount of cash as well. So if and when the opportunities come, we will be happy to jump in. But no major alarms on the ASX. We're plodding along okay, but certainly there's some value in certain sectors, which we're going to talk about. Moving on to the US. If you look at the US S&P 500, completely different story. This year, the S&P 500 is up around 16% year to date, but that's pretty good. And you can see the uptrend since October lows of last year. Now, currently, we're starting to see a little bit of consolidation in the US markets. There's been a downgrade of the US credit rating. There's been some downgrade on the 10 regional banks recently from Moody's. The earnings season been pretty all right, not too bad. But all in all, look, we still think there is some correction coming up on the S&P 500. We do believe that US is going to go into a mild recession in the next 6 to 9 months. And because of that, we are suggesting to not go and chase those high-tech growth stocks in the US market. However, there is some value stocks and sectors that we are comfortable buying or holding. So again, you've got to be a little bit more selective in your stock picking. But all in all, having 15 to 20% cash is a good idea. And then the opportunities will come in the next 6 months to 9 months. So that's our view on the US market. All right, let's move on, because this webinar today is more about stocks and sectors. And in particular, we're going to talk about mining, but we're also going to cover a few other sectors like property. We're going to cover industrials, telcos, financials, dividend stocks. So there's a lot coming your way. So let's start with mining first. Now, most of you would know that mining has had a pretty strong run in the last 2 to 3 years. This chart shows you the commodity index for from the Bloomberg setup. Now you can see from 2020 lows from COVID March 2020 days, we have seen a huge rise in the commodity index. And of course, a lot of our companies like BHP, Rio, etc., have benefited from that, and they've been churning over a lot of cash, which is great. But the last 12 months, we have seen the commodities come down a little bit off their peak, mainly because the US dollar has gone up, because interest rates have gone up, and that's pushed the US dollar higher. Having said that, as you can see on the charts, recently, the story has changed. The US dollar has now weakened, as expected, and the commodities are breaking out to the top side once again. And this is very bullish for Australia and very bullish for our companies, because of course we're very heavy in resources. That is the negative side of this rising commodity index, is if commodities rise, including oil and energy, then that could add to inflation again, especially in the US, but all around the world. So that's the flip side to the coin. But as an investor, you have every reason to believe that commodities has a part to play in your portfolio. And if you pick the right stocks, which we'll show you in a moment, you can make some money. So let's start with energy first. Energy index, if you look at the last month, energy has had a huge jump. You can see from oil to natural gas to uranium and others. You've seen 15, 20, 30% rises in the last month in basically energy across the world. Year to date, some of them are down, but they are now making a comeback. So if you look at, for example, the ASX energy index, that has had a phenomenal run from 2020 onwards, and it is now breaking out. You can see it's broken through resistance, and it's now breaking out to the top side. And that is a huge play in the energy space, and we are quite excited by that in terms of our stock picking. And we're going to talk about a couple of stocks. So first up, let's have a look at crude oil. Now, this is the thing that still makes the world go round, is oil. And even though we are moving more into clean energy and lithium and nickel, but certainly you've got oil still making the world go round. Now, you can see the oil price, which has come off from recent lows of around mid-60s, and now it's broken out of resistance and clearly broken through $82 a barrel, which was previous resistance, and now breaking to the top side. Our anticipation is this will continue, and we expect this to go past 90 and even closer to the $100 a barrel mark over the coming months. So with that said, how is that going to benefit you as an investor? Well, you can look at a few stocks which are in that space. For example, Chris, I'm going to pass it on to you to talk about Woodside.
Yeah, so what a great chart to show. We've got a lot of members who own Woodside, but hopefully you listeners today is a stock that you hold or definitely got it on your watch list. As you can see, you'd be very happy, Roger, if you bought them over the last 12 months, but we actually got in many months ago around the $13. So again, with what Roger has said about interest rates, the energy sector, oil prices, we actually like the energy sector. Woodside has been a buy for some time with fat profits, paying a very good yield. And as we can see, it's on the uptrend. So we've been getting in at some good prices, Roger.
Yeah, absolutely. And it's getting close to all-time highs. So that is a very good sign. Of course, there's a bit of resistance around $39, $40, but we anticipate if oil prices continue to go higher, then this will easily break through that. And not to mention they're paying very, very good dividends. So that's a stock we've got on a buy list. Moving on to coal. Now, as you can see, from coal prices from 2020 onwards have also gone up many, many times, gone up about 5 or 6 times. And that has turned around the fortunes of many companies in Australia. But recently, it has come down dramatically as well. So you've got to take that into account. So what's happening now? Well, it's making a comeback. And it's up around 4.5%, 5% in the last month. And we anticipate that this will now start rising as well, along with all the other energy. Now, one of the stocks we can talk to you about is Whitehaven Coal. You may have already seen it, or you may own it, or you may have watched one of our previous webinars. And I can see here, now we've got close to 400 people watching now. I'm sure there's a few faces or a few names that I can see here I've seen before. I'm sure you guys have watched our webinars in the past. You would have seen us talk about Whitehaven Coal. And Whitehaven Coal is a classic turnaround story where they were struggling because coal prices were quite low in 2020. And when coal prices started to rise, we got in just about $2. And we've made, of course, a reasonable amount of money over this time. We have sold half along the way. So we do tell you when to buy, but we also tell you when to sell, lock some profits, but we've kept the other half. Now what's happening to Whitehaven, after a bit of consolidation around $6, it's now broken to the top side and gone past $7 and beyond. And we now anticipate that this is a sustainable uptrend. So this is a stock we currently got a hold rating on. We're not buying any more, but we did buy around the $6 mark when it dropped. So now we're just holding the other half. And if you're looking out for this stock, you can add it to your watch list. They also pay very, very strong dividends because they have a very strong cash flow thanks to the last 2 or 3 years of solid earnings.
And so Roger, can I just, sure. Roger, can I just add to that slide, speaking with the analysts, they've got a net cash reserve of 2.7 billion. And the analyst was saying that they're well leveraged to benefit from the higher coal price and the demand. So at some point we will move that hold to a buy, and that's when we alert our members. But yeah, great stock to be watching.
Good point there. Moving on to uranium then. Well, this is a new sector that Fat Profits have now gotten into. We've been looking at uranium for some time, and we've been waiting for the right time to get involved. And that right time is here. So you've got a brand new recommendation. This is one of the emails that we sent to our member base of 20,000 members and when we decided to buy uranium. And what are we looking at? So firstly, you're looking at the uranium spot price. You can see it's been in a sustainable uptrend for some time, but recently we've started to see it break through resistance, and we anticipate this to continue for the next couple of years. So what are we looking at? Well, we can't give away all the stocks here today, but one thing we can give you as a clue is an ETF. Now, some people like ETFs because they're less risky. It's got a basket of stocks, so you're not putting all your eggs in one basket. Now, this particular ETF called URA, this is listed on the New York Stock Exchange. So they are a US listed ETF, but you can buy that, of course, depending on your trading platform. If you're allowed to buy international stocks or ETF, you can purchase this. So we've got into this ETF for direct exposure to uranium, and you can see that there clearly it has now broken through the recent trend. It's bounced off support and now marching higher. So we anticipate this to continue to go higher. So that's one option. Another option is you can look at individual stocks in uranium, and we've got a couple. We can't give away all of them today, but you can check them out. But if you're a member with Fat Profits, you can log on to the website and you can check out what we're recommending, or you can call us and we can discuss those stocks. But there's a stock in Australia which we've recently added to our portfolio. So that's uranium. And moving on to soft commodities. So Chris, maybe you can talk about some of the soft commodities starting to rise as well.
Yeah, so we've got, we like the soft commodity sector. We've got quite a few on the watch list at the moment, as you can see with the wheat prices there. Consolidating has done very well over the last few months. So what we've done at the moment, we're telling our members what to buy, but we've got a stock that we've got on a watch list at the moment, which is GrainCorp. So you may have seen this company before. They're quite a well-diversified agriculture company. So Roger said earlier, not only do we tell you when to buy, when to hold, when to sell half, but we tell you what we're watching. So as you can see, we've got a traffic light. It's consolidating, support level around $7, PE ratio of only 6 times earnings, and over a 5% yield. So we don't rush into things. We want a lot of boxes ticked, but here's a stock that we're telling our members at the moment that we're watching. And once it hits a level our analysts are happy with, then we'll turn that traffic light to a buy. And we'll tell our members at what price they should be buying them.
Yeah, that's right. So currently it's not a buy recommendation, so to keep that in mind. So we're not suggesting that, but when the timing is better, then we will issue a buy recommendation. So this is a stock you can add to your watch list. Again, for medium to long-term investors, that's what we're looking at. All right, moving on to another sector now, gold. So Chris, gold is pretty close to our heart because we've been buying
Sure
gold
is.
and not only wearing it as well. I'm sure you love to wear your gold.
Yeah,
So
we've been
tell us about it.
speaking to Angus, the CEO. We've been following gold since it was 260 an ounce. So yeah, we love gold. And as we can see, it's done very, very well, even as far back as just 2019. A lot of our listeners are probably holding gold bullion, maybe some explorers, some producers. But as we can see, it's a bit of a consolidation. So we're hovering around the 19.15 US an ounce. Roger mentioned a bit earlier, the US dollar has been quite strong. But once we see, again, the elephant in the room is inflation and interest rates in America, that mild recession in America, well, that's obviously going to push the US dollar down and will push the gold price up. I mean, even if you've been following JP Morgan and Morgan Stanley, they've got a target price of about 2,100 US an ounce. So yeah, we like gold. We've got quite a few stocks in the gold portfolio, but one in particular we'll show today is Northern Star. Yeah, done very, very well with this stock, as you can see, right back to 2014. So just about a decade at 43 cents. Early bird catches the worm. So we bought over time, as you can see, a small investment of 10,000 back then, 2,630% return. We've kept buying over time. And even we had Saracen Minerals in one of our portfolios, which was a takeover. So yeah, what a great stock. And we're still recommending it as a buy based on what we said earlier with the US dollar and also the gold price at the moment.
Absolutely. What a great story. So gone up 27 times. That's, if you don't mind, and that's a lot of money. But look, it's had a recent pullback, as you can see on the chart. So this is not a bad time to look at adding to the portfolio if you're looking for a gold exposure. Moving on to another sector in commodities where we're seeing some big moves is lithium. And you'll be living under a rock if you haven't noticed lithium and nickel stocks in the last couple of years, because they've been the talk of the town. And again, similar to coal, last 2 or 3 years, they've seen multiple times expansion. Recently, in the last 6 months, they've seen a pullback and now a re-rating again. So you will go through some wild swings, there's no question. But one stock which we were going to give you today, which we also talked about a month ago, is Azure Minerals. Now, for those of you who watched our webinar a month ago, we talked about Azure Minerals when it was $1.50 and it had shot up dramatically. Wait till you see what they're on today, but let's talk about what's going on with this company. So the Andover project, they've been drilling and providing a lot of announcements on their results. Now, this is the recent announcement, exceptional results. They have very high quality lithium and some solid amounts of it. And the width is very strong. The location is very good. And you can see here, the market is absolutely excited about this particular stock. This is up over 1,100% year to date. It's now trading at $2.65. Only a month ago, it was $1.50 when we had the last webinar. And in the last webinar, we had sold half at $1.50. Now, when did we buy this? You can see that there at 10 cents. And we bought it a few more times since. And now we sold half at $1.50. So we made a lot of money on this particular stock. 10,000 has turned into $228,000. This is insane, Chris. And I know you've been speaking to a lot of people who've invested in this stock.
Yeah, what a stock, eh? And I love this chart because, yes, we got in back in 2020, but we've been re-recommending this stock quite often, Roger, around the 29 cents mark. And as you said, we gave it for free about a month ago at $1.50 and also about $1.10. But yeah, we've got a couple of members. One of my members put 15,000 at 30 cents. So he's a very happy member, Roger. Life-changing, really, with a $15,000 investment.
Yep, and I can tell you from a lot of my conversations, there was one of our members who lives in Thailand. He's Australian, but he lives in Thailand. And I had a chat with him, I don't know, about a few weeks ago. And yeah, he's made about $350,000 and he's still holding on. He said, and he called me a few weeks ago. He said, "Oh, should I sell it?" And we had a bit of a chat. But he's sitting on $350,000 profit and he's loving life. He's semi-retired. He lives over there. But anyway, look, long story short, there are a lot of gems like that we can find. Currently, we're not recommending that as a buy for obvious reasons, but it is something you can add to your watch list. These are the type of stocks you want. Just one of them a year and you'll be very happy. Moving on. Okay, for some of you who might be aware of Fat Profits, for the others, look, Fat Profits, we've been around for 23 years now. Our first office in Sydney was opened back in 2000. This picture is of our CEO, Angus Geddes. And Angus is originally from New Zealand. And you can see there, he's won an award from the New Zealand Chamber of Commerce at the young age of 17, when he turned $200 into $35,000 at the young age of 17. So it's fair to say that he knows a few things or two about investing. So he's the leader, he's the founder of the company, he's also the fund manager. So he manages over $200 million in real money. And we've got many offices around the globe, including London in 2003, Auckland 2012. We also have wealth management. So Chris, you worked in Sydney and London, haven't you? How long have you been with us?
Yep, so I've been here for just topped over 12 years. So Angus is a bit of a legend in the industry, also in the office. Maybe not so much when the Rugby World Cup is coming up in September, being a Kiwi. But yeah, we've got quite a large residential office over there in the London office. But as you can see, coverage, we look over Australia, Asia, US, UK, Europe, and also emerging markets. So yeah, if there's an opportunity, our analysts are on top of it.
Yep, and you worked in London as well for a few years, haven't you?
Yep, I was over there for 5 years, Roger. So yeah, very good experience on the footsie and some opportunities that side of the world.
Except for the weather, I'm sure. All right. We also have, and you may have seen Angus on TV, no doubt. You may have also seen David Lennox. He's our mining analyst. He's also on AusBiz and a lot of TV channels doing interviews. So he's a geologist. He's also an ex-fund manager for Colonial. and he's been with Fat Profits for a number of years, over 10 years, and he provides all our mining research. So you're in very safe hands, a lot of experience with our team. And the Azure Minerals, for example, that's one of his recommendations.
Correct.
Now, Chris, we also manage real money.
Yeah, as you can see, there's a few portfolios that we manage, and you can speak to us in regards to which portfolio might suit you, but that's the wealth management team. They've been doing it for over a decade now. So again, if it's something that you find more beneficial for our team to look after your money, then there's an opportunity there too, and they do extremely well.
Yep, and you can see the orange line, that's our managed fund, which is the Australian portfolio, and the black line is the ASX. So we've tripled the ASX over the last 15 years, and that's nothing to be sneezed at. That's a huge outperformance, and we're very proud of that. So these are real returns based on real money invested in the market. All right, before we talk about a couple other sectors, and we're going to talk about a few more stocks today, there's a lot coming your way. Let's talk also about a few stocks you should avoid, because it's just as important. So currently, based on what we're seeing in the market, the stocks in retail space, for example, Myer, who recently announced the earnings and got absolutely smashed, and for obvious reasons. The earnings for a lot of retailers are on their way down because of higher interest rates, cost of living pressures, and that's expected to continue. We're not out of the woods yet for another 6 to 12 months at the very least, before we start to see rate cuts perhaps, until inflation is in control. So Myer, unfortunately, is one of many stocks which are going to get re-rated to the downside, and you've got to be very cautious holding retail stocks, consumer discretionary stocks. So that's where you've got to really rethink about what you're holding and whether you want to maintain these positions going forward. So this is one stock we're avoiding. We're also avoiding things like buy now, pay later, which we've been avoiding for a long time. Things like Zip, absolutely smashed down 98% of their value. So at this point in time, some people think it's still worth a punt. Well, we don't, because it's based on fundamentals, not on charts. So that's another stock we're avoiding. And Magellan, Chris, I think you want to talk about Magellan?
Yep, so we like the fintech sector. We actually got in at $1.24, and we took profits on the highs. And the amount of times, our listeners, the amount of times we had people calling saying, should I buy at 60? Should I buy at 40? Should I buy at 24? We're not saying we've got a crystal ball, but the advice was to avoid it. And as we can see, it's been a great decision. So again, we do have fintech stocks in our portfolio, but we have continually advised our members once we took profits on the highs, not to get back in.
All right. And the last one just for today is A2 Milk, and some of you might own it and you might not like what we're about to say. Avoid this stock. Look, all in all, reasonable company, and I actually even drink their products, so there's nothing wrong with them. But just where the business cycle is at the moment, and the fact that their earnings have come down, at the moment we don't think there is a great deal of enthusiasm about their future earnings, and we've looked at their books. At this point in time, there's nothing which is coming at us. So we look at it when things are a bit better, but there's better stocks out there, so we're avoiding that as well. All right, we're talking about better stocks. Well, what about dividends? Because these are all growth stocks we talked about so far, commodities, some of these financial stocks. Let's talk about dividend stocks. So we have an income portfolio, which we update quarterly. And this is really for semi-retired and retired investors who like their dividends, franking credits, preserving the capital, investing medium to long term in those companies which are still going to be around. They have good bank balances, they have good low levels of debt, etc., etc. So this portfolio has currently got 21 stocks, and these stocks have been in our portfolio for about 12 years. And as you can see in this particular table, they've been performing at the bottom right, as you can see, at 13.7% per year as a combination of dividends and growth. That's been the annual return over the last 11 to 12 years. So that's been very, very good. And a lot of our members who just like to buy and hold stocks, and only going to make 1 or 2 changes a year, this is perfect for them. So Chris, can you tell us a little bit more about these dividend paying portfolio? What can people expect?
Yeah, so to our listeners today, a lot of our existing members are just your mum and dads and retirees. So they're also looking for income. So as we update this every 3 months, so as you saw, the last one was in May. So we're literally about to update this report. We're not going to show all of the stocks. We've just got ANZ there as an example. We've also got Nine Entertainment, very quickly, an incredible stock to have on your watch list. But the last column there, we can see when members are asking, do stocks pay fully franked or not? Well, we tell you if they are. A lot of our retirees, Roger, like that. But we just give you, again, a gauge, an understanding of what stocks at the moment are undervalued, low risk, paying strong yields. So we'll give you the forecast for this year, and we'll also give you the forecast for next year. So you use it as a second opinion, and obviously if you're looking for income, this is a perfect portfolio to be using as a guide.
Yeah, we've got a question come through from Jaden, and he's asking about Nine Entertainment. He said, is Nine Entertainment a buy at the moment? So Jaden, look, I can answer that.
Go for it.
Sure. So it's not a buy at the moment. It's in our portfolio. It is currently a hold. But one of the things I think you probably have seen is their gross yield is 8.2% for this financial year 23 and 8.5% expected next year, plus, of course, 100% franking credit. So it's very attractive. However, when you become a member of our research subscription, that's when you know when to buy and when to hold and when to sell. So a lot of these stocks get re-rated from time to time, depending on fundamentals. Currently, it is a hold. Okay, so hopefully that answers your question. All right, moving on. A few changes we made to our service this year. For some of you who may have looked at us in the past, first thing what we do is we send a morning email every day, Monday to Friday, to our members, and that has market highlights. So every morning there's a theme, which, for example, in this case says turning the corner, with some pictures, and then there's some highlights of what's happened in the markets overnight. So that's a very informative email which you receive every day from our CEO, and that's our CEO Angus. He's on Ausbiz doing some interviews, talking about what's moving in the markets. The other thing which we've done is we do 2 types of webinars. One is a macro webinar with Angus on a Thursday at 12 p.m. where he talks about global markets, Australian markets, all the major things that are moving. And then we also do a research webinar with our research team for stocks. And in this webinar, our research guys, they talk about a bunch of stocks which are moving, buy, hold, or sell. And you can ask questions. It's live, it's interactive, and all members get together as a community, and then they have a discussion. Right, so these 2 webinars are very popular. It's something we find is very good value for our members. So who comes on these webinars? Well, you can see the most handsome out of all of them is certainly Chris down there in a tie. But Chris, there's a lot of people behind the scenes.
Yeah, and there's a lot of us in the office, and you've probably spoken to some that you see here. So we've got the management, again, some are on television. We're quite often on these webinars. And as I said, you know, if you ever have a question, you can always call up and speak to our seniors. We've got the analysts there as well. So yeah, you've always got someone to talk to, which we find very helpful for our members.
Good. All right. And the other thing is we're a very different service. We provide daily real-time publishing. So what that means is every day we update a few stocks. So if something happens to Maya today, I mean, we don't own Maya, but we will update that on the day and say, look, you need to look at it. Or if some good announcement comes through, we will update you on a daily basis with a few stocks. So that's quite handy. We also send out alerts to your email. So if a stock moves up or down based on an announcement, we will send you an alert straight away, so you're notified immediately. You might be working. So this is the benefit of having us looking at the market for you. And on a Friday, we update you with all the highlights of the week, all the videos of the week, everything in one email. So if you've been busy during the week, you can catch up on all the major highlights. So that's available as well. And the final couple of things before we talk about a few stocks, is we provide you charts on stocks and we give you technical analysis. So it's very important if you're a swing trader or if you look for entry and exit points to look at resistance, support levels, moving averages, and we provide all of them for you to assess very quickly and then make up your mind whether to buy or sell. Chris, we also tell them when to sell.
Yeah, and that's where a lot of our members appreciate not only when to sell, but what price. And we don't always get it right. As you can see, there's a few losses there. But if analysts feel like, hey guys, it's time to take some profits, sell half or sell, we will. And again, just why we got Nine Entertainment on hold, back to our listener earlier asking the question, we actually got in about 2020 at $1. We sold half Nine Entertainment at $3. They look after Stan, the television channel. They own 60% of Domain Holdings. So as I said, we've got it on a hold. We took some profits. A lot of our members were happy with that profit. It was a sell half. And then we'll tell our members when to get in. But yeah, if listeners, you don't know when to sell a stock, Fat Profits will advise you at what point it's worth either selling all or selling half. And you probably recognize a few of these stocks at the moment.
Yep, absolutely. Whitehaven Coal right there, we sold half. And look, the other thing is we don't get all of them right, and we're open to discussing that because there's nothing to hide. But we do get 7 out of 10 right. And I think that's where really, you've got to do the numbers. If you can get 7 out of 10 right, and you can do that consistently, boy, you can make a lot of money. And that's what we try and target. Of course, we want to get 8 or 9 right, but 7 is pretty good. Now, before we talk about another sector, let's talk about property very quickly, because most Australians either have a property as an investment, of course you're living in one, or you invest in property stocks. There is always some interest in that property sector. And one of the things we're looking at is a company called James Hardie. Now, some of you may have noticed it recently, or you may have looked at them. They're a huge construction management company, and they've got a massive portfolio, not just in Australia, but also in North America. And we've got a buy rating on James Hardie, so you can check them out. And recently they announced the earnings, and the earnings were better than forecast, and the margins improved, the profits were a lot higher, and certainly it's a flagship name in this fiber cement industry. So what's happened to the share price? Well, you can see there, we got in 2019 at $8.05. That was an initial buy. Since then, the stock has had a phenomenal run, all the way up to $57. And recently, in 2022, it dropped, and we bought more. We bought it again at a few times around $25, $26, $30. And now it's jumped again and gone past the resistance level of 40. And it's now gone past 46. And we think that this has got every chance over the next 12 months or so to regain previous highs of $57. So there is still some juice left here. They're a phenomenal company. And you can see the amount of money we made here. This has gone up about 5 times since we bought it at $8, just a bit over 5 times. So 10,000 is converted into $55,000 there. So that's one stock you can look at. But another stock, Chris, we own is Vicinity Centres.
Yeah, one of my favorite stocks. They used to be nearly $3 pre-COVID. As we can see, a retail property company, a bit like Westfields, dropped to around the $1 mark. We started showing interest around the $1.50. And then as you can see, we first recommended them at $1.66. So very strong yield, over 6%. In fact, the report said resistance is likely to be formidable at the $2.24 level. And especially with the RBA hopefully finishing or tightening interest rates, Vicinity Centres actually trades 25% below their net asset value. So here you've got a top 100 ASX stock paying an over 6% yield, trading 25% below their net asset value. Our members have got in at $1.66. They're about $1.88, $1.90 at the moment. We've got them on a hold. So for members who haven't got them at the moment, we will alert them at what point they should be buying. And then obviously at some point we will sell half, and we'll tell them when to sell half. But yeah, what a great stock and what a great story to have in your portfolio. Put it in the bottom drawer and just let it earn you money.
That's it. It's a slow and steady stock. It's not going to be an Azure Minerals, but it is a slow and steady top 50 stock, pays a good dividend. So you can check them out. Now, are you ready for some opportunities ahead? Because if you've got a bit of cash and you're looking for some good ideas to make money in the market, I guess that's part of the reason you're watching this webinar today. We're going to talk about a few more stocks in a moment. Before that, let's give you a few reasons to look at the Fat Profit service. And we have a lot of our members, and as I said earlier, we have 20,000 plus members. A lot of them go and post their experience with Fat Profits on productreview.com.au. So you can go and check it out yourself. Here's a few examples. We've got a 4.2 star rating. So we're not, 1 star or 5 star, but we're pretty reasonable. And you can see a few examples of people who are very happy. So you can understand a bit more about our service from these people who've been with us for quite some time. So do yourself a favor, check it out, productreview.com.au, and have a look at some of these experiences. But Chris, there's a few reasons why people should consider joining our service.
Yeah, maybe take a screenshot, listeners, if you're thinking about coming on board with Fat Profits, because this is the page, hopefully that convinces you to do so. So for the last 2 decades, we've been annually performing at around 16.8% on our returns, if you were to use a monopoly money, so to speak, and follow our recommendations. If you don't have the time or inclination or expertise to do the research, we do that for you. We've been around long enough for people to know who we are. As Roger said earlier, we don't get everything right, but we are doing roughly about 7 out of 10 right. And look, there is no cross-selling, there's no marketing, there's no upselling. When you buy a membership, you get the service. And that's what we're very proud of. We're not here to trick anyone. We want people to perform. And as we saw earlier, Angus and the team, we're managing over $200 million of real money as well. So this hopefully gives you a bit of an idea as to what the benefits are if you are to join us, or even if you're just questioning, am I going to benefit from it or not?
Yeah. Look, I would say, look, if you forget about everything we say in this webinar today, just remember this one thing, which is our annual return of 16.85 for not 1 year, not 5 years, that's 23 years. I mean, I would challenge all the 400 people watching this webinar today, how many of you can put your hand up right now and say that you're doing better than that? Not for 1 year, remember, over 23-year period. Our best year has been 71%, and of course our worst year has been negative. So yes, we can all have 1 or 2 good years, but to maintain nearly 17% return annually for a very long time, how many of you today can say, I can do that? And I can do that with a 20 to 30 stock portfolio consistently for a very long time. And that's the real reason why people have joined our service and have stayed with our service. And we will encourage you to look at it, because if you're not getting that return, well, something's missing. And if you're watching this webinar right now and you're looking for an edge and you're looking to do better, well, we've got very good reason for you to consider joining us. So here's the 3 options for you. The 3 memberships we have is standard, premium, or platinum. Now, it doesn't really matter which one you join, they all offer good value. So I'll just explain the difference. The first 3 benefits on all membership types are exactly the same. So you get the daily market commentary, Monday to Friday. You get the weekly members webinars live. You also get the recording, so you can replay later, no problem. You get the Friday Fat Wrap, which is the highlights of the week. So all those 3, no worries. The difference is we have 3 portfolios that you can log into and look at different markets. For example, the first portfolio is Australian equities. That's the #1 portfolio that we run. It covers all of the ASX sectors like financials, mining, tech, real estate, property, retail, industrials, healthcare, you name it. So that has got 40 to 50 stocks, and you can look at all those hand-picked stocks from Fat Profits, and we update them daily. So you will get to see buy, hold, and sell ratings from time to time. So that's the first portfolio that you will definitely benefit from. The second portfolio is called Global Mining. Now, Global Mining can be confusing because sometimes people think it's global. Oh, I don't want to invest overseas. I just want to stick to Australia. Well, in this portfolio, we currently have 30 to 40 stocks, and majority, which is 80% plus, they are ASX listed. The remaining are overseas stocks. So it's got majority Australian miners. And remember Azure Minerals that you saw earlier, AZS, that's in this portfolio. So this is really designed for just mining stocks, looking at small caps, mid caps, advanced explorers, up and coming producers and producers. So it's got a wide variety. Number 3 is global equities, and that covers international stocks only. So this is the one, if you're looking for overseas exposure, it's got 70 to 80 stocks at the moment, US, UK, Europe, Asia, emerging markets. So if you're interested in that, you can subscribe to that. So as a standard member, you can pick any one out of those 3 portfolios, anyone. Okay. As a premium member, you can pick 2 out of those 3, any 2. So most Australian investors would go with Australian equities and mining. That makes sense for most people. Or if you're looking at overseas, you may swap. The second benefit is you also have an account manager, a premium account manager with this service. And that means you can call or email that one person throughout the year, and they will be dedicated to you, and you can ask for market support or questions related to stocks. Okay. Final one is Platinum. That covers all 3, and you still get the account manager. So either one you choose, no problem. They're fully tax deductible, and we can invoice them to your super fund, or you can pay directly from your Visa or MasterCard. It's up to you, it doesn't really matter. That's nice and easy. So what's the price? Chris, good news to you.
Yeah, good description. And as Roger said, we can invoice you in your super fund name. So if you go to our website, you can choose a standard for $13.95. But today, with our webinar, if you wanted to choose a standard package, which gave you the 1 report, then you can get it for $795 for a full 12 months, or you could pay $12.95 and get it for 2 years, which brings down your annual rate. As Roger mentioned, a lot of Australian members are on our premium service. So again, if you go to our website, you could choose that for $19.95. But today, you can get it for 12 months of research for $995. Again, we work on annual rates. So for $1,595, you can get it for 2 years. That gives you all of the Southern Hemisphere recommendations, including the mining report. And as Roger mentioned, you will be able to have a contact. So as you saw with our panelists, a lot of our seniors, there's someone here to talk to that you can liaise with. Platinum, as we mentioned, we've got the London office, we've got a global equities report. So again, you could put your credit card down for $25.95 on our website throughout the year, or you can get it for $12.95 for 12 months today, or for $19.95, you can get the full service for 2 years. So I mean, for $995 a year, you can get basically covered on all global equities, including mining. And anytime you have a question or you need a second opinion, you phone up and you ask the question. So if you're looking for standard, 2 years at an annual rate of $645, premium annual rate $795, or the platinum at $995 for 12 months is a bit of a no-brainer. And obviously we've got a poll here that will allow you to choose which one you're thinking of as well. Maybe something's still unclear to you, so you can click the I'd like to discuss further. But again, it's up to you if you want to go for 1 year or 2 years on the standard, premium, or platinum. And when we speak, it's up to you if you want us to invoice your super fund as well.
Yeah, good work there, Chris. Well, I can tell you from experience that is very, very cheap. And I can tell you $700, $800, $900, whatever it is, it doesn't really matter. We are talking chips, because really, if you'd bought into one of our, good quality stocks and you made tens of thousands of dollars, if not more, then of course we would be not having to sell this. You'd be signing up by calling the office yourself, even at full price, no problem. So look, we'll let you make a pick in the meantime. We'll take a couple of quick questions. In fact, first one, we've got a comment come through from Jonathan here. Jonathan says, Guys, great presentation on commodities in particular. I am a commodity bull, and my brother happens to be a member with you guys for many years, and he forwarded me the link to today's webinar, and I'm glad I joined because I can see why he's been a member of your service for a number of years. Okay, thank you, Jonathan. Appreciate that. He's got a question. He's saying, if I joined the premium service where I'll get 2 portfolios, can I swap one of the portfolios later in the year from global mining to global equities? So I guess I can answer that question. So Jonathan, the answer is normally it's not really. Once you made the pick of the 2 portfolios out of 3, then that's what you have. But if once a year, if you want to swap them around, that's okay. Look, we can make an exception once a year. If you want to move to global equities or something, that's okay. We're reasonably flexible, so not a problem. We can do that for you. Next question. This is from Eliza, and they're saying, can my super fund pay for it? So Chris, maybe you can answer that one.
Yes, so that's definitely possible. A lot of our members write us off as a tax deduction because you're paying for consultancy. I think it was Eliza. So when you call in, we can definitely get your super fund name, and then we can put the tax invoice in your super fund name, Eliza. But if you have any questions, you can just phone in, and maybe even Roger and I, we can help you.
Okay, great.
I've just got one question.
Yep,
so can I just, I've got one question. It actually is attention to Roger. I'm not sure if you can see it. Yep. Max just said, Roger, we recommend Woodside, so all the way back to the start of the webinar, around $37. You recommend it as a buy. Does that mean I have to buy it today at $37?
Oh, good question. So what was the name of the member?
Max.
Oh, Max. Okay. Max, thanks for asking. Look, normally if you're a member of the service, when we issue a buy recommendation, normally we'd suggest for you to buy close to our buy price. Having said that, now it's a little bit further away from when we first recommended it. But if you're still keen to buy today, look, the buy rating remains. But since it's gone a little bit further, we would recommend you to dollar cost average, which means buying it about 3 times over 3 different time frames to allow you to average the price. So hopefully that makes sense. As to when, look, you can talk to us if you're a member. We can guide you and give you some general advice. But if you're not a member, look, we can't guide you there. But currently, all we can say is it is a buy at the moment. Okay. All right. We'll move on. We've got plenty of people who have made some choices. So it looks like there's a few people who are ready with open minds and open wallets. So we'll talk about one more sector today before we wrap it up, and to give you a few more stocks to think about. If you look at industrials, well, in industrials, we're going to give you a few stocks. One is Telstra, which is a household name, of course. Everyone knows Telstra. Telstra has actually had a very good run in the last sort of 2 years, gone from $2.60 all the way up to $4.26. So then it's a sustainable uptrend. The dividends have improved, and we've got a buy rating on Telstra. So if you're on Telstra right now, you're probably happy. But if you're thinking about selling or anything, our general advice is no, it is a buy. We see Telstra maintaining its uptrend and going further. So just some stock for you to think about. The next stock is Spark New Zealand. So maybe Chris, over to you.
Yep, so basically the Telstra of New Zealand, we got in about a decade ago, as you can see, $2.11, pays a great dividend. We continue to hold the stock. We tell our members, again, when to dollar cost average, a bit like what Roger said earlier. But as we can see, over a period of time, quite consistent, hasn't given you a heart attack, but also with a good yield as well.
Oh, I love these slow and steady stocks. You know, they don't give you a heart attack. I like that. So yes, that's a good stock. It's a hold. Domino's Pizza, on the other hand, look, this has been a very interesting stock. Some people love it, some don't. But look, we got in about $51 a few years ago and made some money, and we sold half at $105. It had a phenomenal run, went up to $170 a share, but it was clearly overpriced. Since then, it's pulled back quite dramatically. It's back to our buy price. So now what we're doing is we're holding this stock at the moment, but we can see it's now starting to break out of its recent downtrend, and we may be looking to put a buy on it in the near term. But at this point in time, we're holding and we're watching. We'll be waiting for the next set of results, but this is an interesting stock you can add to your watch list. We do think most of the selling has been done, and there is better opportunity ahead. So this is a stock you can add to your watch list. Now, the last stock for today is a hidden gem. For those of you who are looking for one of our preferred stocks, this is a hidden gem. When you join our service today, we're happy to talk about it and give this stock away to you. But Chris, can you give some highlights of what this stock is about?
I'm really excited about this stock. So as you can see, an underappreciated investment opportunity. So Australian company in the construction infrastructure sector. Quite a low PE ratio of about 14 times earnings, paying a dividend of about 4%. We actually got in, perfect. We got in just after 2019, about 48 cents. The analyst actually was saying that in our view, the company currently is heavily undervalued at current levels. Now, they've actually won over $1.2 billion of construction contracts just in the last 12 months. A great example of Azure Minerals. Early bird catches the worm. So just for argument's sakes, if you got in where we recommended them at 48 cents with $10,000, you'd be at 14,500 at the moment. As we can see, it's only at 70 cents, but we can see it going a lot further. So our members have been getting in before the general public. So yeah, we can't show you the stock because it's one of our highest conviction buys at the moment. But again, you phone in, you take a membership, happy to put this on your watch list or even add it to your portfolio. You won't be disappointed.
Yeah, very good. Well, look, it doesn't take much. Look, if you put in 10,000 in one or two stocks from us and it goes up 10%, even 10%, that's $1,000, pays for the service many times over. So look, this is a stock we see going further, and you can certainly check it out if you're interested in finding out a hidden gem. Look, finally, I'll just highlight this one last time because I can see here quite a few people who couldn't register earlier. In fact, we got a message from Karen earlier saying, sorry, could you put up that question again where I could register for a discounted membership? So look, these are the prices, Karen and the others. If you're still thinking about it and you haven't made up your mind, well, maybe this might be the last chance. And these are the 1 and 2 year prices for standard, premium, and platinum. And what I'll do is I'll just quickly finish off by offering that registration one more time. So if you're still interested, talk to us. We've already had about 20 odd registrations earlier. So if you've got a few more, maybe you can join us now, and we're happy to talk to you, work it out, and get you on board. Try us out 1 or 2 years. What have you got to lose, right? Because you've got to be in it to win it. So you can't make money sitting on the sidelines. But if you want to get into an Azure Minerals, you know, the next Whitehaven Coal, or you know, the next gold stock, whatever that might be, you know, talk to us. We will be happy to work with you. So on that note, look, I think we've got enough registrations, and I'm just going to close it now. But Chris, thank you for your time today. How did you go with the webinar?
Yeah, thanks everyone. Thanks, Roger. That was a really enjoyable webinar. A bit of a change today, stock specifics and sectors, and we hope listeners you found something to take away. And as Roger said, any questions, feel free to just call in, ask for Roger or myself or any other one. We're happy to help.
Excellent. Well, thanks for your company as well. And look, if you have any further questions, you can call the office or you can email us at info@fatprofits.com.au. And my name's Roger. Thanks for your time today, and we wish to talk to you again. Bye for now.